Welcome back to Explain the Charts, where we dissect the financial markets by combining insightful news with technical chart analysis. Today, we're tackling EURUSD, the euro versus the US dollar, a volatile currency pair that's been making headlines lately. Let's start with the news, shall we? Recent Google searches reveal a buzz around the Fed's potential interest rate cut in September, with a 65% probability of a 25 bps reduction. This could be a significant factor influencing EURUSD. The European Central Bank, ECB, is also expected to lower rates gradually if inflation continues to decline. The potential policy gap between the Fed and the ECB might push EURUSD higher, as markets anticipate the ECB to lower rates twice more this year. Germany's economic performance is also under scrutiny, with upcoming releases of retail sales, advanced inflation rate, and the labor market report. The flash inflation rate for the Eurozone will also be closely watched. The recent release of Germany's final Q2 GDP growth rate came in flat YoY and contracted by 0.1% compared to the previous quarter. In addition, consumer confidence worsened to -22.0 for the month of September, which could be a concern for the Eurozone. Now, let's move to the charts and see what they tell us. The one-day chart shows a strong upward trend in EURUSD since the beginning of August. The price has been consistently breaking through resistance levels and establishing new highs. However, we need to consider the recent pullback in the price, which might be a sign of consolidation. It's essential to note that the US dollar index, DXY, has shown a downward bias, which is contributing to the euro's strength. Let's take a closer look at the one-hour chart and zoom in on the last few weeks of trading. The one-hour chart reveals a pattern of bullish momentum interspersed with periods of consolidation. The price has tested the previous resistance level near 1.1000 several times, successfully breaking through each time. This suggests a strong buying pressure, but we need to observe the recent consolidation pattern to see if it's a genuine correction or a potential reversal. Looking at the 15-minute chart, we can see even more granular details. The price has been fluctuating within a tight range, making it challenging to determine the next direction. However, if we look at the recent price action, we notice a series of higher highs and higher lows, hinting at a continuation of the bullish trend. The candlestick patterns on this time frame, such as bullish engulfing and morning star, further support the idea of a bullish continuation. It's critical to remember that the market is highly volatile and subject to unpredictable swings. Therefore, it's crucial to have a solid trading plan and manage your risk effectively. Let's recap the essential price levels and make unbiased predictions based on our analysis. The 1.1000 level has acted as a strong support and resistance level in the past, and it's likely to play a significant role in the coming days. If the price breaks above 1.1150, it would signal a strong bullish momentum, potentially leading to a move towards 1.1200, which is the current yearly high. However, if the price breaks below 1.1000, it could signal a shift in momentum, potentially leading to a downward correction towards 1.0900 or even lower. It's essential to watch the overall market sentiment and economic releases to assess the likelihood of these price movements. In the short term, we can expect EURUSD to continue to consolidate near the current level, with potential for a breakout in either direction. Long term, the bullish trend remains intact, but it's crucial to keep an eye on the economic indicators and market sentiment for any potential changes in the market. As always, remember to do your own research and consult with a qualified financial advisor before making any trading decisions. We hope this analysis was informative, and we'll keep you updated on any significant developments in the EURUSD market. Thank you for joining us on Explain the Charts. Let's zoom in on the one-hour chart and see if we can spot any interesting patterns. We'll focus on the candles from August 11th to present, as this is the most recent and potentially most informative period. Finally, let's look at the 15-minute chart for a more in-depth view of the recent price action. We'll examine the candles from August 22nd, 1719 Universal Time Coordinated, to August 26th, 2349 Universal Time Coordinated, to see the most recent price fluctuations.